The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
The tax lady, we're looking here at around 3 months to the end of 2021, and we want to keep you abreast of everything as it unfolds. And I'm here in studio with Tiffany Fabian. Hey, Tiff.
Hey there, Esther. Happy Saturday.
Happy Saturday to you and Christopher Fabian.
Hello, Esther.
Hello, Christopher. Okay, so a couple things. We want to talk about our tax school starting in October. If you haven't signed up, you got to get your rear in gear.
Yep, that's right. The tech school, the first session already started, and the second one starts October 16th, and it's held at several different locations. It's a great way to learn taxes from A to Z, and the best thing is that we really would like you as a staff member. The nice thing is you work during the winter, and you can have the summers off, and a lot of our
keep you
staff
out of the snow.
Collect unemployment. It's a great job. It's a really good job.
We're talking about here. October the 15th is upon us. What does that mean, Chris?
Dun, dun, dun. End of 2020.
Right. Extension
taxes.
deadlines are up, right?
Yes. Yep.
So October 15th, if you haven't gotten your tax returns in for 2021, that's your time. And that kind of leads me in to this segue. This article was written by Roger Russell for Accounting Today. This is a quote from the Internal Revenue Service, or the director of the Internal Revenue Service. It says, paper returns. It's basically, this article is saying that that they're just so far behind the IRS. It's worst. It's the worst that they've ever been behind. Paper returns have piled up. There's now 5.5 million Form 1040s piled up, with over 4 million business returns that have been opened but not processed. Their goal is by the end of the year to process paper returns. Now, first of all, what does that say about paper returns?
You shouldn't do them.
You should not do them. They don't want your paper returns, and all you're doing is shooting yourself in the foot. So if you filed a paper return and they haven't processed it, you still have time to do the electronic form of that, right?
Right.
That's right. You do. Yep. You still have time, so get it in. I know there's somebody's return I'm working on right now, and he did it paper, and I'm fixing it. I'm in the middle of fixing it, and we're pulling off his kids because he shouldn't have claimed his kids, and so I can file his kids electronically.
Well, I mean, if you do a bad tax return, whether it's paper or electronic, you have to fix it if it's wrong. But the bottom line is, if you're doing a paper return, the IRS doesn't want them. They are processing them last. So you want to make sure that if you have filed a paper return and you just haven't heard hide nor hair from the IRS, you still have time to file it electronically, right?
Absolutely.
Because they haven't processed them.
Right.
All right. And the other thing is, what do you want, Tiff?
Oh, I was just
Yeah, I know.
yeah,
I know.
okay.
She's pointing at the board. I know there's a call holding. And by the way, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. The other thing on the 15th, it's not just tax returns that are due. What else is due, Chris?
F-bars.
F-bars. What is an F-bar?
That's where you're reporting to the government.
Foreign bank account reconciliation, right?
Right.
That's what the acronym stands
Now,
for.
why would they want to, now they're talking about every transaction over $600 they want to be reported to them. Now, the F-bar is when you have money in a foreign bank account over how much, $10,000?
Yes.
At any time during the year?
Correct.
Or you have to report where that bank account is to the Internal Revenue Service by October 15th. And I'm going to tell you something, and no matter how many years that you haven't filed them, you got to get them filed.
That's right.
The penalty is astronomical. They could take up to 100% of what you have in the bank account. So if I were you and you haven't, and you have money in a foreign bank account, and I know you don't think Canada's a foreign country, but they think it is.
Yes.
And so you want to do your F-bar by October 15th.
That's right.
Okay? All right, let's go to Deb. Hey, Deb, I'm Esther Gulius. How can I help you?
Well, I caught the tail end of a conversation you had where you were talking to people who work part-time and collect Social Security.
Uh-huh.
And there was something special.
Earned income credit.
Oh, you mean the earned income credit?
Or how much they can
Right.
make.
Okay, so this year, for the first time ever, this is in a new change in the tax law. If you're over the age of 65 and you're working and your income is on the lighter side of the spectrum, you're not making $80,000, you're making more like $15,000, $16,000, $17,000 a year, then you could qualify for the earned income credit even if you don't have children in your home. So that is a recent change. So seniors that are working, maybe you work in the summertime cutting grass at a golf stadium, or you work at Walmart, or you do a little sales at Christmas time, that is earned income. And if your income is relatively modest, even if you don't have children at home, but if you do have children at home, you make a lot of money. But even if you don't have children at home and you're over the age of 65, where in the past you wouldn't have gotten it, you will now get the earned income credit.
Well, what about this? I am 70. I have a part-time job. I make $50,000.
How much?
50.
50,000?
Yes.
Oh, you make too much money. You won't qualify for
But
the
you
earned
can put
income
money
credit.
into an IRA.
Right, and that's another change. You can put money into an IRA for the first time ever at that age.
Okay.
Okay?
So putting
Right.
money into an IRA is really good because it'll lower
Reduces
your
your
income.
tax bracket. Right, your taxable income, and so it saves you money in taxes.
Okay. All
Okay?
right.
Hey, thanks for calling, Deb.
But that
All right.
was what you missed. And good
Yeah,
question.
that's
Very
right.
good question.
All right, so we want to talk about, the deadline's coming up. October 15th is just this week, isn't it? It's Friday?
Yep.
Yep,
So
today's the 9th.
Friday the 15th is the deadline to file your taxes. If you filed a paper return, you can still have time to get it done electronically, so they'll process it. They just don't have time to process those paper returns. They don't like them.
Somebody I know at a place, they said, I heard this press release that the IRS is too overwhelmed and they can't answer calls. And so she said, I thought I would try it myself. So she tried to call the IRS and it went, ding, 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 ding. We can't answer your phone call.
That's true. They're absolutely overwhelmed.
Yeah.
Okay, so
Yeah, well, you had that letter you wanted to read, Esther.
which letter? I did. I read it.
Oh,
She read it really
Sorry.
fast.
The article. I
Yes.
didn't read the whole article.
Okay.
But basically the article said, "Oh my gosh, we are so overwhelmed."
Uh-oh, somebody's calling from Fort Erie.
All
They
right.
might have heard your F-bar thing.
Now the other thing is what we want to talk about is tax planning. Even if they haven't changed the tax law, and we know they're going to, I don't know when they're going to get their together here, but when they do, we will let you know. But tax planning is something you should look at anyway, and especially if you have appreciated stock, because if they do change the tax law and the upper income people are going to pay at almost double capital gains rate, you really want to make sure that you're poised to sell it. Also, you can gift away appreciated stock to charity, and you get the appreciated value without paying the taxes on it. So either you want to explain that?
It's a good way to get rid of your assets and get a tax deduction at the same time.
So let's say you got stock that you paid $1,000 for and it's worth $90,000 now. If you give it to a charity, how much of a write-off do you get?
$90,000.
Even though you haven't paid the taxes on it.
Yep.
It's remarkable. So those are things that as we approach the end of the tax year and you're wanting to make your moves, those are things you want to look at.
Correct.
Right?
Yep.
All right, I'm Esther Gilius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone, and our text number is 716-8030930. We got Fort Erie and Gordon, and your calls coming in. We'll be back on the other side. I got all my sisters with me. Hey, I'm Esther Gilius, the tax lady. You know we want to help you with your taxes, and I want to tell you, with inflation the way it is, the amount of taxes you're paying at the pump, I would like a mortgage here to fill up my gas tank, and so everything's important, and we certainly want to help you with this portion of your finances. And we are going to go to Fort Erie. We're going to talk to our friend from Canada. How are you, friend from Canada? How can we help you?
Hi, Esther. Did they change the date for filing the FBAR?
No, it's due October 15th.
The due dates of
the due date.
Because the paperwork I've had in the past was always April 15th.
It is April 15th, but they extended it. With the extension, it's up till October 15th.
Okay, so this year they did that because of COVID.
No, I think that you could have gotten an automatic extension every year.
Oh, okay. I didn't realize that. I thought it...
But did you get your FBAR in, Diane?
By April 15th?
Atta good girl. That's great.
Okay.
So what are you, a U.S. citizen living in Canada?
Correct.
Yeah, that's good. Well, we love you. We love Canadians. I feel like I'm part Canadian because we're so close to the border. So thanks for calling.
Okay, thank you.
Thank you. Bye-bye. Okay, and we're going to go to Gordon. Hi, Gordon. How can we help you?
Good afternoon, Esther. How are you?
I'm good.
Good. Quick question for you. I'm on Social Security. I make less than $20,000 annually.
In Social Security or pensions or what's...
Just Social Security. That's
okay.
what you wrote.
All right.
I have several little 401
IRAs and things of that nature, right?
IRAs.
Yeah.
And I'm wondering, should I cash them in as they come due? They're not making anything.
Right.
And I'm wondering if I do, and I stay under the $25,000 tax limit, will I have to pay state or local tax on those if I break them?
Okay, so how much are we talking about collectively?
Wait, are you single or married?
I'm single, and I might have 4 or 5 of them. They're probably worth $1,000 a piece or something.
All right, so first of all, you're not going to pay tax. The $25,000 floor is whether your Social Security becomes taxable, but over and above that, you have your standard deduction. And so you're well under the standard deduction, so go ahead and cash them in.
All right, I'm probably going to do that. I could use a little boost with the gas prices going with.
All right. Thanks, Gordon.
Thank you.
All right, bye-bye. What people don't realize is so many people want to do Roth. I want to do a Roth. I want to do a Roth. I want to do a Roth. Because it's going to be tax-free when I take it out. What people don't understand is the standard deduction when you're single is good, but when you're married filing a joint return over the age of 65, it's unbelievable. It's like $28,000. So you could take that much out of your IRA or pension plans and still not pay taxes on that money that you're taking out, and many people just miss it because they think they don't have to. Now, you don't have to, but you might want to, right?
Yep, absolutely.
Okay, we got lots of texts coming in.
The one says, hello, folks. Riddle me this, Batman. How in the world is the government going to hire 72,000 IRS workers when they can't even get anybody into work now?
I don't know, but if I ran the IRS, we'd get them in. I mean, it just seems to me that it is a priority. Maybe they could take some of the illegals that are crossing over.
Take the
right?
people who are on unemployment. Oh, we have a job for you. Here you go.
Well, I mean, it would require people to be held accountable. And we don't want to hold anybody accountable anymore.
And then another thing is that somebody told me, or you read it, it takes like a year to hire and to train somebody.
Everybody. Right.
And to get them up and running. So
I know that's why if you got a paper return in the IRS, just come on in. We'll file it electronically,
right.
And you'll be at least on your way for this year. And believe me, there's people that are waiting for refunds from 2019 still.
Right.
Okay, so what else we got up here? We have,
I don't understand it.
So, no, the electronic vehicle credits. See, Esther,
Esther, I'm planning to buy an electric vehicle. There are $7,500 federal tax credits, but I only pay $5,000 per year in taxes. So can I roll over the balance?
All right. So, Chris, can they?
Yes, you can roll it over for. Hold on,
while he's looking,
but here's the other thing. Even though you only pay $5,000 a year in taxes, maybe you want to take some money out of your IRA. And if you're under the age over the age of 59 and a half, and make that tax liability higher so you can take full advantage of the credit on your federal return.
And then be careful. There's only like $60,000 credits per vehicle. So
60,000 cars.
60,000 cars. So I would like to know what kind of car you're buying to tell you if that credit is still even
Well,
available.
I'm sure when you
to
go into the dealership, they'll tell you if they've sold 60,000 cars. Right?
Think so? I don't think so.
That's a salesman.
Well, no, but on top of everything, they're having a hard time getting cars. So, you know, that's the other thing. But yes,
what were
the
you gonna say,
electronic
Chris?
vehicle credit is if they haven't sold 60,000 cars, then the credit is $7,500. If you only have a $5,000 tax liability, then you can carry forward to next year. But think about you utilizing that to get some taxable income up to that credit so that you can utilize it this year.
And what were you going to say, Chris?
It's a 20-year carry forward, but also I can tell you, if you're buying a Tesla, there's no more credits for Teslas. I know that one. That one was gone in 2019.
All right, and then I got this one, WTF. So I know what it means. 600 a transaction. That's a gigatax. It's not a gigatax. It is. Every transaction over $600 has to be reported to the Internal Revenue Service from your bank. So that's a new regulation that's coming down the pike. Now, I've heard this debated, and obviously I'm not in favor of it, but I've heard this debated that this way they can keep track of people who are working under the table and getting cash, and this would kind of help them to find out who's cheating. So that's coming down the pipe.
That's the mustard. That's how they spin it.
So in tax planning, remember if they pass this law so that the cap gains rate are going up, and that starts in 2022, you want to get rid of what you can in 2021. So work with your stockbroker to see what you might have poised to get rid of if you need to. And let's go back to the phones. 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930, and we're going to go to John and Alden. Hi, John.
Hello, everyone. How are you?
Good.
My wife and I are going to be taking care of a toddler that has a biological connection to us for the next 3 years, between 3 and 4 years. Is there any? I can't claim that as a child, my child. Correct?
No, that is not your child, correct?
No.
All right, and are you charging to do the daycare?
No.
You're not. You're just doing this out of the goodness of your heart.
Yes.
Okay. So if it's not your child living in your home, then, and I'm assuming that the parent is working?
No.
No. So the parents have no income?
There's only one parent, and she's incarcerated.
Okay. So that kind of changes everything. So first of all, there's 5 dependency support tests. Number 1, the first one would be gross income. This baby does not have gross taxable income, correct?
No.
All right. Second one.
Well, very, very, minimal.
All right. So the second test would be support. Are you providing over 50% of the cost of the child's support to be on this earth for a year?
100%.
All right. Third one, she's not filing a joint return.
No.
Right? It is a relative?
It's your grandchild.
Right? It is a relative?
No, it's not.
It's no way a relative.
No, there's no biological connection
All right.
to my wife.
All right. So then if you're not a relative, it has to be someone that is living in your home for the full year. And obviously the child is a citizen, right?
Yes.
So you would not get the you wouldn't get the child tax credit. You would get the other dependent credit, and you'd be able to get a $500 credit for that child, because it technically isn't your child, but it's considered an other dependent.
Okay.
Okay. And I think it's a wonderful thing that
So
what you're doing.
you can claim them.
Yeah, you would claim them, but as an other dependent, not as a child.
And that's $500.
$500, yeah, something back.
Okay. Thank you very much.
All right, thank you, John. Yeah. So if it has to be a biological child or brother, sister, it has to be a close relative in order for it to be and under the age of 18 to be considered a child that you would be taking care of. And then, of course, then you would get a whole lot of money. You would get $3,000 if the child is over the age of 6 till 18, and then $3,600 if the child's under the age of 6. Right?
Right.
All right. I'm Esther Gilius, the tax lady, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. Okay. Gifting. We can talk about gifting. A lot of it's, the holidays are coming up, and a lot of times people are feeling generous. And so if you do a gift of an asset, you have to be very careful because of the potential tax consequences to the person to whom you gave the gift, right?
That's right.
So, what does that mean? Well, cripe, we're getting close to the
So
news.
if you
All right,
give
so
somebody a house.
that is our cliffhanger on the other side. When you give somebody a gift, and that's handled separately than as if they inherited it. So we want to make sure that if you're getting generous at Christmas time and you're giving away your house, that you understand that your heirs may not be so happy when they go to sell it. I'm going to take a short break with the news. I'm Esther Gilius, the tax lady from EG Tax. We'll see you on the other side. It's so great to know that somebody is in your corner, and EG Tax is in your corner. So no matter what, even if you think it doesn't have anything to do with taxes, you can call us. And one thing about us, we will find somebody to answer the question for you. We will point you in the right direction.
Right.
Because, it's so terrible when we see people in January, February, March, and April, and they did something in the previous tax year before it ended. And had they just called us, it might have saved them a ton of money. And one of those things might be, the charitable rollover. When you're over the age of 72 and you're required to take money out of your pension and IRAs, a lot of people might have to take out $25,000, $30,000, $40,000 in RMD, but there's a way around it, right?
You could do a charitable direct rollover to a charity, a 501c3, which would be great. And then it's not taxable to you. And if you're so inclined and a giving person, that's a great way to sow a seed.
Right. And so it's not deductible to you, but by the same token, it's not taxable to you. And if you had Social Security that was going to be taxable, it alleviates that as well. So, and the other thing is, we were talking about gifting. When you gift a capital asset, and let's say 10 years later, you had that house that you put in your son or daughter's name, and then you unfortunately pass away and your son and daughter might sell the house, what would they have to pay taxes on if it was gifted to them?
If it was gifted, it goes back to that original gifter's basis. So
what the gifter paid plus their improvements and expense to purchase and sell,
right,
is their basis. So if they paid $40,000 and put $20 in repairs, that's $60, and that the kids sell it for $360, they pay taxes on $300,000.
Correct.
Right?
Correct, which is a lot of money. And so if they change the law, that would even be worse.
Right. Well, they're talking about, and right now they haven't changed it. So, and they're still talking about stepped up basis and everything.
Now, on the other side, if you
inherited it, what's the deal?
Then you get the stepped up basis, what it was worth on the date of the person's passings, the value on the
right. So
date.
if mom didn't give the house but put it in the will or did a life estate, then the fair market value on the date of her death would be the value as if you paid for it, and then there would be no taxes.
Correct.
So it's really important that before you get generous, you understand. Now, is this true if it's money, Chris?
Money is money. Cash is cash. So there's no, even though the value changes with inflation, but $10,000 today is still $10,000 in 3 years.
Right.
So that doesn't matter. Stocks, the same thing goes true with stocks, though, as a house. What it was worth.
Because it's a capital asset.
Because it's a capital asset. Right.
Okay. I'm Esther Gilius, the tax lady, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. Remember, October 15th is next Friday, and your F-bars are due and your personal tax returns are due. Now, can you get another extension on the extension?
No.
Yes, you can. But you have to have a really good excuse. I mean, you really do. I mean, like if you're laying in the hospital dying, they will give you that. But they usually are very, very, very short.
Right.
So it's not that Chris is wrong. It's very unusual. Okay. We're going to go to the phones and talk to Mike. Hi, Mike. How can we help you, sir?
Yes. If someone gives $30,000 a year to support their mother who's not working, is there any tax break for the giver?
Well, maybe. So, again, we go back to those 5 tests. Does your mother have any gross income, taxable income?
It's not my mother, but anyways, it's...
Well, let's say some mother.
They probably get Social Security.
Would the mother have any source of income other than Social Security?
No, she don't have a Social Security. She's not working.
Okay, so this person is under the age of 62?
Yes, and there's like a teenage child in the household.
All right. So now this person, is it a relative of yours?
Not my relative, but we'll say.
Let's pretend it is. So just for you, we know that it's really not, but just so we can clarify what's deductible and what isn't. So if this person were a relative of yours, it would. This person is how old? Would you say?
Probably late 50s.
All right, late 50s. No source of income, no welfare, no Social Security, no wages.
No.
And this person has a child that lives with them?
Yes.
All right. Does that person and the child live with you?
No.
They
have their own.
They have their own home. Do they live in a home that you provide?
Mortgage on.
Do they live in a home that you provide?
I beg your pardon?
Do they live in a home that you own?
No.
No. Okay, so is this person related to you at all?
Well, we'll just say it's, I don't know if you call it related, it's my daughter's mother-in-law.
Okay, all right, so it's your daughter's mother-in-law. So if they have no source of income, why aren't they on welfare?
Because they don't want to get out of their house. They have like 2 or 3 mortgages on the house.
Okay. So this person, if they were smart, wouldn't you think, Chris, that this person should go and work?
Go to work.
If they went to work, they'd get an earned income credit, number one.
The mother.
All right. The mother of the 15-year-old child, if she went to work, would get an earned income credit for that 15-year-old child, number one. Number two, that lady this year, even if she doesn't work, is still going to get a $3,000 credit if she files a tax return because she has a qualifying child that lives with her. So when she files her tax return this year, even though she doesn't have to file, she's going to get a $3,000 refund.
But she doesn't want to work. My son-in-law is giving $30,000 a year to her.
Okay, she doesn't have to work to get the $3,000.
There's nothing the giver can. There's no credit the giver can, right?
No, he'll get nothing.
But she's going to get $3,000.
Actually, the son, because it's his mother-in-law, his wife's mother,
right,
would be able to claim that if they're giving the mother and the child $30,000, and that's what they're using to live on. Then your son would be able to claim them, and they would save $1,000. Well,
no, because she'll only get $500 for each one. They'll only get other relative, whereas the kid the mother filed for the kid, she'd get $3, right?
Yep, that's where I was going.
I'm sorry, Chris. I'm sorry. Stepped on you. Sorry.
Okay,
So it's better for the lady of the kid to file the return this year for herself, and she'll get $3,000. If your son claimed her, which Chris is right, he could, all your son would get is $1,000.
Yeah, because the new child tax credit is huge.
Right.
Okay, then thank you.
All right, thanks, Mike.
So, but really, they should put the money in their account. You know what I mean?
Well, and that's true, but you can't make her.
No,
right?
Right.
But let's let's carry this out. So if this lady who's sitting home not working with all the mortgages, if she went out and got a part-time job, not only would she get the $3,000 for her son, she also would get an earned income credit, right?
And so many people are looking for wonderful staff members.
And if the child were 12 rather than 15, and she had to pay somebody to do daycare, she could get a daycare credit of 50% up to $4,000 for this child. So she could get 4 and 3 and an earned income credit. She could get like $10,000 refunds if the right things happen. And that's why tax planning is so important.
Exactly. Go get a little
and
job.
That's one of the reasons why our tax school is so great. People, when they're in our school, they go, I had no idea this is how it worked. You guys are like the bank. That's true. We are like the bank. We give all kinds of money out. I don't know if we're the bank, but we're the bank of going broke, the United States, right? All right.
And the folks who are giving the money don't answer the phone or don't help you very much.
That's true. That's true. All right. I'm Esther Gilius, the tax lady. 8030930. 8030930, star 930 on a cell phone. You can text us at 716-8030930. Okay, so we talked about gifting. Another thing people need to do with tax planning, and it isn't just for wealthy people that are moderate income or lower income that want to go on Medicaid, they need to tax plan too, right?
They
Why?
do.
Well, actually, it's not so much tax planning as it is elder planning, right?
Right. So if you are qualifying for Medicaid, which is the low-income health insurance, your income has to stay below a certain amount, and you have to report all of your wages to, the Medicaid system so that you can continue to get Medicaid. Is that what you're referring to?
No, I'm referring to like a nursing home.
Oh, okay, Medicaid.
Right, Chris?
Okay,
Right.
I understand what you're saying now.
Medicaid turns to Medicare turns Medicaid for nursing homes. Yeah, sorry, had to walk that through. But yeah, they got a plan because, that you got to use your assets until you have like 14,000 or 18,000 left, and then you can go on the Medicaid to help pay for the nursing home.
Right, but this has to be out of your care and control for 5 years. Otherwise, they still make you do private pay until that 5-year period is up. So that's why, as you're getting older, and if you don't have a glob of assets, so let's say you have $100,000, right, and you really don't want to give your $100,000 to the nursing home, but you'd really like to go on Medicaid if the time comes, right? If you don't give the control of that money to your heirs, and you still have that money in your bank account the day you want to go into a nursing home, they'll say you pay or you don't come in. We're not gonna put you on Medicaid.
Yeah,
right?
And the same with your house too, and that's why some people do a life estate.
Right,
yes.
And that's why planning is so important because of these things. It isn't just rich people that have to plan. It is people, if you have a modest income, modest savings, you saved your whole life to have that $100,000. I can remember one client that we had. He was the loveliest man in the world, and he basically worked at AT&T. And he never cashed a paycheck. He just put all that money into AT&T stock. But what he and his wife lived off of was he was a tinkerer. And he lived off the money he made tinkering in his garage. So he never lived high off the hog. And he had maybe $1 million saved. And we kept saying to him, Mr. Sir, you better do something with this money. Do some trusts. You need to gift it away to your daughters. And ultimately, He and his wife both ended up being private pay patients in a nursing home, and they both lived about 6 years until there almost was no money left. There was some money left to go to his grandson, but he gave away almost all of it because he didn't plan and give it away. Wow. So he had to be private pay patient all the way through.
There was a client I was with the other day. I was doing an extension for her, and so her lawyer put her money into a life estate. And then her husband had stock, but when he passed away, the kids are the beneficiary. He didn't make his wife the beneficiary, or the lawyer opted to not make the wife the beneficiary so that the money would not go to a nursing home should she have to go into a nursing home. So also the beneficiaries are really important.
So
too.
Everything is important. And I will tell you, if you just haven't gone to see an elder care attorney and you're approaching those golden years, you want to make sure that even though, this is all you have, I'm going to tell you, at $15,000 a month, that money gets eaten up very quickly.
Oh, my God.
Very fast.
Very
Nursing
quickly.
homes are so expensive.
Right. And they won't even put you in the nursing home unless you can do private pay. I'm Esther Gilius, the tax lady, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. We're going to take a short break and be back with your questions on the other side.
The bills make me wanna shout. Kick your heels up and shout. Throw your hands up and shout. Throw your head back and
That's
shout.
a good game tomorrow.
I'm afraid. I'm going to just hide in a closet. But the good thing is it's late at night.
Yeah.
So I go to bed at 8 o'clock at night, so I'll probably get up like 3 times, Anyway, I'm Esther Gilius, the tax lady, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. And we got some texts. What do we got here?
No,
It
Chris,
says-
you're wrong.
No, right
Chris,
there.
you're wrong.
It says, no, I'm not, Tiff.
All right,
It
don't
says,
fight.
Esther, I filed a paper 2020 personal return early in March. IRS Gov shows my return not processed yet. Should I contact you to file an electronic return?
Are you
Thank
kidding me?
Ron.
Of course you should, Ron. Yes, for sure. I mean, because if we do an electronic return for you tomorrow, they'll process it on Tuesday. You'll have your money like next week if it's direct deposit. So I would. Yes, I would, sir. I mean, you don't have to come see us, Ron, but anybody that can file you electronically, that's what should happen. And you should promise I'll never do a paper return again. Right? What else we got here?
And which one's first?
If I
Which one's
collected unemployment for at least 1 week in 2021, they qualify for fee low-cost health insurance. Oh, okay, that goes with, okay. All right, so read that. I don't see how that all works, Chris.
If I paid for several months for my COBRA insurance before the help became available, will I be able to receive a tax credit for the months I self-paid through the exchange? Oh, wait, maybe this is really, it's a three-part text.
Oh, wow.
So if one collected unemployment for at least 1 week in 2021, they qualify for free low-cost health insurance as part of the American Recovery.
That's correct. They would have paid for it if you were on COBRA.
Right. So
they did that, number one. Number two, would you get a credit for this year if they then started paying on their own? And it really depends on how the money all fleshes out, all the income they got. It isn't with the insurance. It's all the gross income that you got.
Sorry.
Yeah, go on.
Which is a good lead to next week.
Right.
We have
that's true.
Brian coming in, who's now our healthcare specialist right now. So this texter, if you want to call in next week or call our office.
You can talk directly to Brian.
Right.
I self-paid.
And he'll know all the answers.
There's the I self-paid, not purchased through the exchange.
Yeah.
If I paid for several months of COBRA. So I don't know if he's alluding to also itemizing it.
No, he's talking about the credit that you get for excess payments to health insurance when you're paying it on your own.
Yeah, the 8962.
Right, that's what he's talking about. But yes, you may qualify. It all depends on how your income fleshes out to how much you paid. Right, but again, next week Brian will be here.
I mean, he said he didn't get it through.
No, that was the first one.
No, it's all the same phone number.
Okay, all right, Tiff, we're good. We're going to have him talk to Brian next
He
week.
needs to call him.
All right.
I agree.
And anyways, going back to Mike, the caller,
Oh yeah, remember Mike, the caller with the mother-in-law or the lady
the
that
son's
son was
mother-in-law,
supporting.
Yes. So right now, the son gives mom $30,000, or mother-in-law $30,000. If she went out, got a job for $5,000, she gets the $3,000 child tax credit. And then she would also get an earned income credit for $2,000 between the federal and New York State. So that's $10,000 that this lady would receive. Then the son-in-law only would have to come up with $20,000.
Good point.
Also, she would qualify for food stamps and utility assistance and lunch assistance.
Right.
So, I mean...
why don't you have her call us and maybe we can talk some sense into her, because it sounds like she's running away right now. And sometimes you'd be surprised what you can do. Maybe a bankruptcy would save the house for her.
Yep.
You know?
That's right.
Yep.
All right, let's go back to the phones. We'll talk to Jim. Hi, Jim.
Hey, Esther.
What's happening?
I know October 15th is the deadline for 1040s, but what happens if you don't get it in by then? If you're getting a refund, when's the last date that the IRS stops accepting returns? Because I know they do, they won't accept it in December.
No, they'll accept a return anytime you want to send it in, even if it's 5 years late. They'll accept it. But your refund you will lose your refund if your return is later than 3 years from the due date of the return.
Right.
Right, but the IRS turns their computers off for December to
only
gear
to
up
reboot
to reboot them for the next year. So if you're going to be after December, you should wait till like January 20th of the following year, because
and
then
you
the computers are back on.
Yeah, right. So it's not like they aren't accepting them; they're rebooting their computers.
So say, how about end of November is your go date?
November 30th or
Yeah.
What about my computer crashed and I lost all my stuff, but can I access my last year's return on the IRS website?
You can get them, right, Tev?
Yeah, you can call me and we can call the IRS and they could put them in my portal. But the only problem I snicker is it's so hard to get a hold of the IRS right now, but you can fill out a 4506T and they will mail you a copy of your return, or you can try calling me, but you can Google IRS form 4506T and they'll mail you a copy of last year's. And if I could get a hold of the IRS with you, we could do a conference call, but it's so sketchy right now.
And that'll be like all the schedules and everything, right?
Yes, sir. Oh, they're not.
No, it's it's a transcript.
It's a transcript.
They do mail some of this.
Oh, because I have I own a business and I have an office and home.
And you didn't keep a paper copy of anything?
Well, I didn't print it. No, I didn't.
Okay.
Can't you pay?
Okay. Well, you can ask. You can
State.
send in a 4506, and they'll send you a paper copy of everything.
Transcript.
Yeah. But
it should like the Schedule C and the office and home.
I think if you pay the IRS, you can get a better copy.
Right.
Call me on Monday and I'll help you to work
Call
through it.
Call Tiffany at 632-7886, Jim. Okay.
On Monday.
On Monday. Okay, we'll help you.
Thank you.
Thank you, sir. Okay. Some of the other things I want to talk about. Let's say you got what? Got another text you can't figure out.
Any talk about New York State PTET opportunity in by 10/15/2021?
That's the pass-through entity pays its own. So if you have an S-Corp, what they're saying is instead of having the income flow through to your personal return and you pay the taxes on that, the corporation will pay its own taxes. It's 6 in one, half dozen the other. It's not going to change the answer.
So no stress about the deadline.
Don't stress about the PTET.
New York State sales tax or the tax rate associated with their home sale or orders to New York I own a small business. How about this? And we recently have been receiving and shipping orders to new out of New York State customers. Should we charge them New York State sales tax or the tax rate associated with the state, their home state?
Okay, so if where you receive the goods is who gets the sales tax, right?
Right.
Right.
So if you're sending something to Ohio and they're receiving it in Ohio, then they'd have to pay Ohio sales.
They pay the use tax.
Right, which is sales tax.
Right. You don't charge them the tax. They have to pay the use tax, just like on the New York return where it says, do you have any sales tax or use tax? So like if you went to the Indian Reservation or a different county that pays less tax than Erie County, imagine that. But every state has their own line on their tax return, so that's what they would say.
But I think they're shipping, so they have to collect. If they're shipping it out of the state.
No, it goes by the buyer's address. The only time they collect sales tax is if it's inside New York State.
They don't have to collect Ohio tax?
No.
Oh, great.
Nope. It's up
just
to
New York, just for New York State people.
Yep, for people who live in New York.
Okay.
And if you have a question, you can call Chris on Monday at 632-7886. He's sort of our sales tax guru, I think.
All right. I'm Esther Gillius, the tax lady, 8030930, 8030930. Star 930 on cell phone. Do we have another text that we can't understand? Or are we
No,
good?
they're all the same.
Okay, good enough. If you're looking for money this time of year because your credit cards are going crazy, and you're thinking, I know, I'll just go take the money out of my IRA. If you're somebody that's working and you're paying and you're in at least the 10% tax bracket, in other words, you're not paying zero taxes, and you're under the age of 59 and a half, they're going to charge you the 10% plus if you're in the 10% tax bracket, plus 10%, plus the state of New York. And if you took out a lot, you might move yourself up to the higher bracket. So be very careful before you take money out of an IRA, especially or a pension plan, if you're under the age of 59 and a half. A better thing to do, especially if you have a home, is to maybe look at refinancing and taking money out on a refi, because you would pay at 4%, you might pay in one, it would be 4%, and maybe if you took money out of your IRA, you might be paying 16%. It would take 4 years of home equity to equal what you would pay in 1 year if you took it out of your IRA. So just something to think about. Don't think about the IRA or your pension plan as a piggy bank. If you are going to tap it, though, how should you tap it, Chris?
Make sure you have a glass under the tap.
No, but I mean, you would borrow the money.
You borrow the money,
right?
Yes.
And you pay yourself back.
Yes.
All right, let's go quickly back to Jim. Hey, Jim, how can we help you, sir?
Hey, quick question. If you have multiple IRAs, let's say they're 20,000 on one, 10 on another. I got 3 of them. The minimum required distribution, I'm 77. Do I have to take it out of each one, or can I?
No. If they're all IRAs, one's not an SEP, one's not a 401. If they're all IRAs, you can lump them together and do the RMD.
Thank you very much.
You're very welcome. Thanks for calling. Okay, I'm Esther Gillius, the tax lady from EG Tax. If you are wanting to take that paper return and turn it into electronic, we're there all next week. Certainly want to help you. I presume, are we going to have extended hours on the 15th? Probably.
Sure.
Chris, you're looking at me strange. And so October 15th is coming up. If you haven't filed your FBARs, we do FBARs. We'll do your tax returns, your corporate returns, your personal returns. If you need the best help, give EG Tax a call at 632-7886. Go to our website at egtax.com. And until next week, I'm Esther Gillius, the tax lady, with Tiffany Fabian, Christopher Fabian. Thanks for listening, and thanks for letting us help you. Bye-bye.